CEO at NeoVision Wealth Management. Ryan, Julius Baer, one of those shops recommending going long on U.S. quality stocks. What is your conclusion on U.S. earnings thus far?
Well, first of all, we stay on the sidelines, neither long or short U.S. equities, because we feel we are at the peak of the cycle. Multiple things are happening. First of all, the U.S. is putting on a lot of debt. Commercial real estate is an issue. A $90 million offices were sold for $16 million on foreclosure with 40% occupancy rate. This is hitting bank balance sheets. As for retail companies, consumer companies, well, it's thinning. People are looking for bargains, they're looking for discounts, and this is not really growing anymore as it should. And finally, the retail households, well, they're extracting their equity. Their savings rate is going down, so they're consuming less.
Just in terms of some of the big stories driving the debate as we speak, the red headline, in fact, crossing the terminal, that the OpenAI interim CEO, Murati, plans to rehire Altman Brockman. I mean, this is as the board and investors and company are in impasse after what has been a chaotic weekend. The board is at odds with investors. I'm reading this as it's crossing the terminal, seeking to hire new CEO from outside. Before we went to air, you told me this is a huge deal, Yusuf. Let's make sure after the earnings comment, I want to talk about that. Tell me what's on your mind.
100%. Yusuf, as you know, I have a very strong view on this. When the U.S. markets, stock markets were very sluggish a few months ago, something materialized, came out of the blue, which is ChatGPT, AI is here, right? This has driven the whole U.S. stock market rally since. It's based on ChatGPT, the need for chips, the need for NVIDIA and other companies like that. When I look at what has been the cornerstone of the U.S. stock market's rally happening, which is an absolute circus, it's like a small startup company. This is very, very concerning. Okay. This has been the basis.
But what are some of the immediate market implications for this? I mean, where do you sort of sell, buy? I mean, what's the trade plan?
Well, the trade, again, NVIDIA is very much overvalued, and we talked about its earnings some time ago. 39% of its earnings is coming from just two clients. The Chinese have bought a lot before President Biden put in place its ban on chips. So this is not a trade for us. We stay on the sidelines. There are other places where we make much more money.
And then in terms of the Treasuries auction that's coming through, is it built on sand, the rally that we've seen in fixed income, or do you think that, if anything, it's going to add a little bit of a backbone to this?
Well, we think that yields will go up again. Investors are requiring more yields for lending the U.S. government. The latest auction has been really an utter failure. I have not seen a failure like that on Treasury auctions in a long time. So investors want more yield. Yes, it's a temporary rally. Everyone hit 5% on 10-year. We do believe yields could go up again.
One of the notes over the weekend, this one from Eric Robertson from Standard Chartered. And as we begin to reflect on the announcement that China is basically saying the course when it comes to some of the moves by commercial lenders, and also see what's happening with those yields, he writes, the key question is whether Asia ex-Japan FX can move out of the shadow of China's economic performance. We believe the Korean won and the Aussie dollar are undervalued. Should the U.S. dollar turn lower, we think these two currencies offer the best appreciation potential among Asia ex-Japan. Here references AXJ FX. Agree, disagree?
Yes, agree, and that's why we're long Japan, because we do believe that the yen could rally from here. It has a ceiling set by the BOJ, and now there will be tightening in the policy, and this is in favor of the yen, so yes, absolutely.
What is your commodities exposure at the moment? I mean, where are you recalibrating, given what we're seeing with the Bloomberg dollar index, which had its worst week in months?
Yeah, well, we're buyers of oil on dips. We're buyers of gold on dips, but in a very limited proportions of the global portfolios. As for China, we are starting to buy very selectively, because we do think that the rebound in earnings that we've seen, 4.9% for Q3 after a big drop of 11.4% in Q2, this is a good starting to buy certain strategic names like Alibaba, for example.
All right, so the focus would be on tech within China equity, and that's pretty much it, or are you also looking at fixed income?
No, only equities. EVs, for example. EVs margins are very tight. They're adopting the Lavash Meg strategy, which is gaining market share. Profit margins are very thin at 5%, but they are gaining market share. This is a story to come in a year's time, so we start to buy from today.
What about the geopolitics, which have sort of been one of the bigger headaches for people who say, you know what, China's actually not a bad value proposition, but the geopolitics keeps us ring-fenced. You had a similar view not
100%.
too long ago. Is the geopolitics now out of the way after the latest meeting in the U.S.?
Well, it's much better, especially when listening to President Xi's speech, where he said, he's basically coming with an olive branch, saying we don't want to fight with anyone, we want peace and be friends with everyone. This is major. When President Xi says that in the US, this is major. He wouldn't say it if he didn't mean it. So yes, we do think on the geopolitical front between US and China, there's a détente today.
Ryan, great to catch up. Thank you for stopping by in our